Good morning, and welcome to Ask the Expert, an award-winning daily series from 8:30 to 9 a.m. to help small businesses. If you have any questions, you can ask them in the comments of the live feed. If you need any more advice, you can join the official Intuit QuickBooks SMB community group on Facebook, where the accountants and business experts are on hand 24/7. During this live session, we will be running a poll, so please do engage with it, and I will reveal the results at the end. My name is Eva Mrazikova, and I'm accountancy market specialist for Iris Software Group. In my role, I'm trying to help the accountants to be as much efficient as possible in their practice, but also as a licensed accountant, I am helping businesses making sure that their digital onboarding is as smooth as possible. We often look into reviewing of their current processes, and we try to improve on those and implement efficiencies. Also really now preparing for the next stages of making tax digital and how this is going to impact so many businesses, but also how this is going to impact the accountants. So I just wanted to recap on few things because there are so many things happening in our world, and then I will be talking about the upcoming VAT changes in the rates. So the first of all, self-employment support scheme grant number 5. For those who you don't know, you have until 30th of September to apply. And you didn't have to apply for the grant number 4 in order to be eligible. We are looking at your trading figures between May and September 2021. So you need to look whether you have been adversely affected. Also, there is one extra step that the HMRC is taking where they are doing turnover test. So you are going to be comparing April 20 to March 2021. And then you're going to be ideally comparing it to previous year and looking at your turnover. So again, don't forget you have until 30th of September to apply. Job retention scheme. So big changes. Obviously, the first one that came into effect in July, where the government subsidy dropped down from 80 to 70%, but the employer had still had to pay to the employee 80%. And for August and September claims, the government is paying 60%, but the employer still has to supply employee with 80%, at least 80% of their normal or average salary. So make sure whenever you are claiming that you know your figures, whether you have employees on full or flexible furlough, so that you can claim the correct amount. Obviously, claims for August, you can claim until 14th of September. It's kind of on month-on-month basis now. So this is going to be significant change. It's going to impact many employers because they will have higher salary costs. And then obviously from October onwards, they will have to pay the full salary or wage themselves to the employees. So that is quite a significant change. And going to my last change and the big topic that I wanted to talk about a little bit closer today are upcoming VAT rate changes for specific industries. We are talking mainly about hospitality industry and connected industries, where The temporary reduced VAT rate of 5% will be ending on 30th of September 2021, and from the 1st of October there will be another reduced rate of 12.5% introduced, and that will be valid or effective until 31st of March 2022. And then from April 2022, it'll go back to the original 20%. Just a few kind of hits if you are, this is for mainly for those who don't have any digital software adopted as of yet. The VAT fraction for the 5% is 1 divided by 21, multiplied by the gross amount. For the 12.5% is 1 divided by 9, multiplied by the gross amount. And for the 20 is 1 divided by 6, multiplied by the gross amount. So this is kind of the VAT amount that you would be getting. Also, for the flat rate scheme, for the VAT, obviously we have this in place. So this is kind of when you are paying fixed VAT rate. Those reduced rates also changed. So we have until 30th of September 2021, where for catering 4.5% was, then we have for hotels was 0% and for pubs 1%. So from the 1st of October 2021, the catering, you'll have interim VAT rate of 8.5%. Hotels will have interim VAT rate of 5.5%, and pubs interim VAT rate of 4%, and then again it'll go back to the original, depending on the flat rate scheme, from April 2022. So those are quite the big changes, and to me it's very important the way you deal with this, because it can become very, very messy for you guys. So the importance of accurate record keeping and the importance of digital record keeping, I think, cannot be emphasized enough here, because it's going to significantly impact the amount of money that you will be able to keep for yourself. Obviously, when the rate is going to be increased, it means you have to pay more to HMRC. So you need to kind of know what's what. If you are using digital software, you should familiarize yourself with the VAT rate settings, have a look where those are and what are the rates there, so you can then amend for the new changes coming from the 1st of October. If they are not already there, but you need to incorporate this into your cash flow planning and your budgets, because if you imagine that you had little or very, very reduced VAT rates, that will now, it's going to increase, it means less money in your bank account. So you need to plan for this accordingly in terms of your cash flow and in terms of your other outgoings. So please make sure that you really are using digital record keeping software. Obviously, QuickBooks, it's a great one to have, and it will keep you right. So you really need, and you need to be able to demonstrate the cutoff point, and you need to be able to identify the old rate and the new rate. So it is really important for you guys to make sure that you are using efficient tool, because it can become very messy. So never underestimate the way you do this. Then the last, just a little bit, because it's quite a complex matter, but we know that there were some VAT changes for the EU e-commerce, where from the 1st of July 2021, all supplies of goods and services to EU consumers should be taxed where the consumer is located in the EU. So this is a significant extension to the existing provision and has the potential to create lots of additional EU VAT compliance and reporting obligations for the UK businesses. So depending on where you are, what you're doing, what your type of business, make sure that you look into those, because they are some quite specific and probably within the industry that you will be working at. You should be able to kind of find more information relating much more to your scenario, but do not ignore those changes. So I'm going to now start taking questions because we have already a few in the queue. Carrie from Instagram DMs. Hey, Eva. Hello. I'm just starting out on my self-employed journey with bank accounts. Is it okay to use my personal account or should I get a business one? Carrie, thank you for your question. Definitely always get separate business accounts. If you do it from the start, it will make things much more easier for you and potentially for your accountant if you will need one. I cannot be stressing the importance of making clear cut between personal and business outgoings and income. It can mess up your tax return, your self-assessment, and also you might get confused between personal and business transactions. So I would always recommend to set up separate account. Usually the banks are now very good. They would offer cashback or no charges for 12, 24 months. So really shop around. There are some good deals available in terms of opening a business bank account, but please give yourself chance for easier start with this business bank account. Hopefully this answered your questions and good luck, Carrie. Mindy on Twitter DM, how do we account for items we buy for work but then return later? What do we categorize refunds like this? So I'm thinking, Mindy, that you are asking me as a business. So if you will buy, say, for example, some purchases in some kind of, so you would record purchase invoice or just account for it whenever it was taken from your account. So if you then return those later, you would kind of get what's called supplier credit. That's the terminology that is used in the QuickBooks. So you can account for the supplier credit. So it is really, it's not an income, it's a refund. So if you imagine that when you bought something, when you made a purchase, that increased your expenses. So when you return part of it or all of it, it's not your normal income, kind of sales income as your turnover, but it is your refund. So it's decreasing the expense that you had before, if it makes sense. So you should be using the same code. If you are using digital software, you should be using the same code for the money that for whenever you paid it out as whenever you getting money in, because this is not your normal trading income, if it makes sense. I'm hoping this is the question you were looking for. If not, please get in touch. Calvin on Facebook Messenger, just to clarify, this VAT rate change only applies to hospitality and retail, right? All other sectors didn't have any changes in VAT due to lockdown. Yes, Calvin, this is very good point and very good questions. There were specific businesses who were let's say, enjoying the reduced VAT rate. This was to boost the hospitality sector, who was probably one of the hardest that were hit during the pandemic. So this was kind of, and also to encourage, to people again to get back to normal and dine in and use the restaurants and hotels. So yes, you would have known, I would say HMRC would have written to you if this would apply to your specific business. So if you are in any other type of industry, very likely that the VAT rate changes didn't apply to you. And good luck with your endeavors. Nicholas on Twitter DM, is there a particular reason they decided to have a transitional rate of 12.5% before going back to the full 20%? It's a good question again, and yes, it seems like they want to complicate things more than actually help us, but I think the way I see it, it's kind of, it has been welcome in transition, so you don't have a big jump from 5 to 20% because there's like ultimately 15% extra cost for the business. So I think that's why they went for the interim date, so it's not as painful for the businesses. But yeah, in terms of the record keeping and recording it's absolute logistical nightmare for many businesses. So that's why I'm kind of going back, very important digital record keeping software such as QuickBooks, because yes, if you are trying to do it on spreadsheets, that can become bit of a nightmare. So that's kind of, I think it was just to help the businesses to adjust for the higher rate before it goes to the full-blown 20%, which would be, in terms of the money-wise or financial impact, it's going to be a welcome kind of transition planned by HMRC. But yeah, in terms of the kind of logistics, because also if you have tills and like points of sales, you need to make sure that you kind of adjusting for those rates as well. So yeah, I think that's the reason, just to kind of make it less painful. So Jordan on Facebook Messenger. Good morning, Eva. My business is recovering well since restrictions and eased, but even then we may need to cut our outgoings significantly in order to cover all the additional upcoming costs, loans, furlough, and in VAT rise. Any advice on what we should be looking at? Jordan, this is a very good question, and this is kind of going back to what I was talking about. Yes, it's going to take a while for the things to get back fully to normal. So even if your income is increasing, it's very likely not going to be quick positive change, and you need to kind of pay attention to all the outgoings or all the, yes, so that, for example, the loans and everything that will need to start to be paid out, furlough is ending. So what I would recommend is to kind of work on your cash flow forecast, where you will account for all those changes. So bear that in mind. You are going to slot in your incomings, but you need to then be able to slot in your additional expenses as you are going to have them. So you need to make sure that you see it clear in black and white. So yes, maybe my income is going to increase, but my expenses are going to increase as well. Plan your outgoings if you can, possibly plan them, try to spread. If you, for example, don't need to make the specific purchase, maybe delay it. in terms of the VAT rise, that's another, because it can be quite a big cash flow blow. So make sure that it's making sense when you look at the money coming in and money coming out. Don't spend it all, because effectively you will have to pay it out to HMRC. So it's kind of you trying to create the balance between what is coming in and what is coming out. So to me, it's reviewing your cash flow needs on a weekly basis, almost, just to make sure there are no nasty surprises. If there are any direct debits, then you can maybe change the dates or move, speak to your financial provider to work with you on that, because it can be quite hard if you imagine that you're going to be paying more VAT. You will have salary costs back full to 100%. You might start to pay back the loans. So that's all quite significant change that will be happening all at once. So when you're looking at your income, is the income kind of going to cover all of those? And if not, speak to your bank, speak to your suppliers, whether they can extend the credit terms. Look at how long are your customers taking to pay the invoices as well. Maybe introduce early settlement discount so you can get the money in quicker, things like that. So yeah, very important. And as I always say, don't be burying your head in the sand, because then it will hit you twice as hard. If you need any more advice, Jordan, please get in touch afterwards, but hopefully this will help you. Iman on Facebook Messenger: the VAT holiday has really helped my restaurant survive, but I'm worried things will, with COVID, may spike again over autumn, winter, and then customers may be put off if our prices rise to cover this. How should we keep potential customers engaged? So I assume then you have a restaurant. Very good. And this is what this was supposed for, to help really the hospitality industry kind of to recover. One thing is sure, that nothing is sure and nothing is certain. We don't know whether there would be another lockdown or what way we would work if there is again spike in the cases. So I think you need to scrutinize what you do right here, right now, and kind of try not to be scared too much, but again, try to be scrupulous and try to plan. So how would you keep potential customers engaged? Really depending kind of what are your options. If there would be a case of another lockdown, for example, I'm thinking, should you be maybe start thinking about delivery, takeaway, delivering rather than waiting for your customers come in. And then if you have increase in prices, try to incentivize, maybe like on Tuesday, everybody dining will have 20% off, or something like that. So try to keep it interesting for your customers. They always are looking for the deals or for something different. So, and kind of try to reward them, or maybe do like reward scheme or something where you will reward with your existing customers who are coming back. Try to reward them with, say, for example, discount, or maybe free coffee, free drink, whatever you can manage to do. It's a tricky one, because you are a business, so you need to make sure that you are making money, which is very important. So try that. Many customers did understand when the prices had to increase, because the businesses had to survive. But yeah, it's quite a sensitive one. So just make sure you stay engaged, that the customers are always excited about going back to your restaurant. They're excited about your menu, about the food you offer. So yeah, be innovative, try to be different, but in a good way, and good luck with your endeavors. Phoebe on Instagram DM, currently running an online store for my crafting as a side hustle, but thinking about going full-time with it. We're not currently VAT registered. At what point should we register? And then what are our duties and liabilities? So Phoebe, again, very good question, on point. So your compulsory VAT registration would kick in when your turnover would be over the 85,000 mark. But you can register voluntarily. What it's going to mean, because sometimes this is where the businesses are a little bit more confused. Yes, it's great that you will be able to, when you VAT registered, you will be able to claim the VAT on the business purchases. That's called input VAT. So you are able to recover that. But you need to make sure that whatever you have charged your clients, you either have to increase the price by 20%, which can kind of have a negative feedback from your customers, or if you still charge the existing prices, they are going to eat into your profit. So you need to kind of weigh this up against each other, because sometimes it does make sense to be voluntarily registered, but sometimes it doesn't. Well, if you will get the turnover over, there is no question, then you will have to be VAT registered. So what are the duties? Obviously, you will need to be then declaring the VAT on, usually it's on a quarterly or on a monthly basis. There are other, like annual VAT accounting scheme, which is limited by the turnover of 1.35 million. So anyhow, you will need to report the VAT. So the classical example I'm going to use is the quarterly one, where on the quarterly basis, you will report all your purchases and you will report all your sales. And then you have to submit those figures and pay the liability. So your output VAT, which is your VAT on your sales, minus your input VAT, which is your VAT on your purchases, and then the difference you have to declare to HMRC. So it's kind of another cash flow outgoing that you will need to bear in mind, but you have to do it on a quarterly basis. So say, for example, if your VAT quarter is at the end of June, you have 30 plus 7 days. So you have until the 7th of August to submit your VAT return and pay the liability. And just to make all of this a little bit complicated, the Making Tax Digital for the VAT is coming, is widening from April 2022, where all VAT registered businesses will have to comply with this, which means you need to be able to submit the VAT return through digital MTD compliant software. So you need to make sure that you have digital record keeping. Really, so those are the kind of obligations and what you need to do, so you can benefit from it, but it might be a burden on you. So you need to make sure that you kind of write down all your pros and cons on this. Guys, thank you so much for all your questions. We are coming to the end. The time flies when you're having fun. I'm just going to announce the poll results. So we have asked you, was the VAT cut beneficial for your business? 20% of you said yes, 0% of you said no, and 80% answered doesn't apply to my industry. So yes, probably I can say then probably 20% of our this morning's audience is some kind of connected to the hospitality industry. It's great that you guys feel, and as one of you mentioned on the questions, that you guys feel that you did benefit from it. But we need to make sure we are able then again to stand on our both feet independently. So hopefully the interim rate will help you to adjust. But please, look into your finances now. Don't be making any rushed financial decisions until you see the full picture. Make a plan and see how it's going to pan out for you from April. This will be changing as we go along, as the April will be closer, but work on it, review your plan, make sure that you know your figures. So thank you again for all of you for tuning this morning. And if you have any more questions, you can get in touch with me directly on LinkedIn, Eva Mrazikova, where you find me. And coming up on Ask the Expert tomorrow is Joanna Jensen, founder and executive chairman of Child's Farm, the UK's #1 baby and children toiletry brand. Tune in to learn how to build a business empire. Just a reminder that if you need any more advice, you can join the official Intuit QuickBooks SMB community group on Facebook, where the accountants and business experts are on hand 24/7. It has been a pleasure again today to start my Monday morning with you. Thank you so much. Stay safe, take care, and have a lovely week.